first day of October, Tuesday, October 1st, here in Atlanta. It's a shit show, an absolute shit show in Atlanta. We had the storm come through. There are way worse off people than I am in Atlanta, in Georgia, in South Carolina, in North Carolina, specifically Asheville is just it is crazy, the stuff that's going on in Asheville right now. But Atlanta, we had the storm come through. We got fires going on. We got chlorine clouds. If you didn't know, Atlanta's a freaking mess. Stay away. I mean, that's 5 p.m. traffic yesterday with that Death Walker. And then you got Godzilla coming up. Yeah, it's apocalyptic here. Absolutely apocalyptic. I did get a comment on YouTube yesterday that they were upset that my show is so unorganized. First off, F you. Second off, I am not a teacher. I don't teach like fifth graders every day. I'm a guy who does this on his own. I don't have a mass amount of producers. So if it's unorganized and you don't like it, don't tune in. I don't care. Doesn't matter to me. I'm just trying to provide people who want help. And if you don't want it, move on. Bye, Felicia. See ya. That's it. So let's look at the Qs yesterday. Because the Qs, it was interesting yesterday. We had a crazy, if you look at a 5-minute chart yesterday on the Qs, look at 3 o'clock on, 3:30 on. You came back up. That was a crazy, crazy rally, which would have indicated to me that we were going to open much higher today. 0.02 hasn't come up. You know, what did you have overnight? You had a dock worker strike. The dock workers went on strike. Now, what I read about this strike is that this is the biggest risk to the holiday season. The port strike, every 1 week that the port strike is on, it means that it takes 2 weeks to actually recover from that. And as you get up towards 1 month, it goes out to 3 months because it takes so much time. I don't understand it. I don't get it. My assumption is it's unions. I'm not a huge union fan, but I do understand that they have reasons for striking, and I'm with whatever side you want me to be on. Honest to God, whatever side you want me to be on, I'm on your side. Whichever one. Let's take a look. What I want to do now, we got big stuff coming up because I got major changes to the core portfolio. I think I got 6 changes to the core portfolio. We got major concerns from Tom Lee, geopolitical stuff. The mystery broker, if you haven't been following that on Michael Santoli's stuff, he's got a very large brokerage firm that he talks to. Mystery broker, they don't do it. More banks are raising their year-end targets, so we'll take a look at that with SPY and stuff. There's a new NVIDIA competitor that just filed for an IPO, and Q4 from Wells Fargo. And then we got the second leading alpha pick stock as far as returns go in their portfolio. And it's a strong buy in the quant, and it just got a cross up on my 4-hour algorithm. So we'll talk about that in the scans portion. So let's take a look at the quarterly. If you didn't know how to look at quarterly, you can go up here in Trendspider. It's got quarterly candles. And so you can take a look at the quarterly performance of each of the ETFs, of your stocks, whatever you want. But this is what's interesting. Look at Qs, okay? Since we started the move up in Q1 2023, that's 18 months ago, 20 months ago, somewhere in that neighborhood, 30 months ago. Gary math is going on. Q1, okay, you were up 19.47%. Huge. Q2 2023, you were up 15.89. Again, we're in a bull market until you're not. And so Q3, you were down 3%. Boy, that hurt. But you still had confirmation. We talk about this confirmation over the 9-day. Q4 of 2023, you were up 14%. That was what I would argue was what felt really good was Q4 2023. Q1 2024, you were up 9%. Q2 2024, you were up 7%. Okay? And then Q3 comes along. And it didn't feel good through the middle of July until today. And you're still questioning it. You're in a bull market until you're not. The Qs were up 1.67 for the third quarter. Okay? The MACD, super high. The RSI is at 76. Do we need a pullback? You probably deserve it. Those are huge, huge quarterly numbers. So let's go in and before we go into the VOO, let's take a look at the 4 hour, because you bring that back. The 4 hour, you're extended. The daily, you're extended. So there does seem to be some validation to the fact that we might see a pullback in October. From the last 13 years in October, look at that. Look at that. 62% positive. Okay, 62% positive in October. The mean change 2.29. That's 13 years. Goes back to 2011. And then November, you're positive. December, it hurts a little bit. But the reality of it is we've been doing really, really well in QQQ. Now let's look at VOO, because you can do the same type of analysis in VOO. When you go over to quarterly here and you look at this one, okay, we go back to Q1 2023. This started in Q4 2022 when you were up 5%. Q1 2023, you're up 6.4%. Q2 2023, you're up 8.41. 2020, and then Q3, you're down 3%. Q4, you're up 11% in 2023. Q1, up 10%. Q2, up 3%. Q3, you're up 5%. So that 5% feels much better than the Q's up 1%, but you're still positive. You're in a bull market until you're not. Now, from a 4 hour standpoint, you can see we're extended. The RSI's at 66. The MACD's up there. Yesterday's afternoon candle was big. Again, the 5 minute chart, it looks like a rally in the afternoon. I would have expected this to open up big today. It didn't. Then you go to SPY. Okay, since a lot of people do options and things of that sort, let's look at SPY. You still have this August 15th gap right there. That August 15th where it opened up higher. I don't remember exactly what happened, but August 15th, something happened. There was some type of catalyst that pushed it higher. We had that gap. Let's go to the quarterly. It's going to match VOO. If you go to the quarterly, you can see this one, same thing. Q4, it started. You were up 5% in Q4. Q1 2023, up 6%. Again, you're in a bull market until you're not. So while it feels a little bit frothy, it feels a little bit, you're still in this bull market. The economy is still very good. We can look at DIA, which is the Dow Jones Industrial ETF. Okay, we can go and look at this one. On a 4 hour, you're in this at 412. You're at 423. The 4 hour algorithm makes you 39% in this one. You make 41% if you bought and held for 24 and a half months. But let's go look at the quarterly. The quarterly, again, it started in Q4 2022. You were up 14% in Q4 2022. 14%. Then you started 0.05 in 2023. You had 2 down quarters, Q3 2023 and then Q2 2024. You were down 1.64. I would argue that was mostly run by Apple. But then when you got into Q3, Apple took off. Q3, just this last quarter in DIA, you're up 7.92%. 7.92%. Again, you're in a bull market until you're not. Now let's talk about IWM, because that's the small caps. Do we see the same kind of thing? Again, from a 4 hour standpoint, you're in at 216, you're trading at 220. You've kind of pulled back a little bit. The MACD's not too far off the oscillator. The RSI's at 58. It's not extended too much. When we pull up the quarterly candles on this one and we look, because we just closed the quarter, look at how muddled this one is. Okay? In Q1 2023, you're up 1.37. Q2 2023, you're up 4.59. Q3 2023, you were down 5.3. Q4, you were up 13.85%. This was the huge winner from Q4 2023. The reason, SMCI. SMCI was still part of IWM during this time, and it was the large portion of it. Now, in Q1, you still had SMCI. It was 5.48%. Q2 and Q3, you pulled the SMCI out of this one. Okay, Q2 2024, it was down 3.74%. Q3 of this year. I'm sorry, Q3 of this year. That was Q2. Q3 of this year, up 8.56%. You have confirmation. You closed above that 9-day. Your MACD, super high. Your RSI extended at 62. Not out of the question that we couldn't go up in Q4. But again, the market is good. You are in a bull market. So don't get pulled into this factor that, oh my God, it's a horrible economy. It's a good economy. The market is doing well. If you're in the market, you're doing fine. So I like I like the markets where they're at. It's just the short term. And it's the 4-hour algorithm that I feel uncomfortable with. It doesn't mean that the large portion of my portfolio isn't still in the market. We have tons of risk. Okay? Here's Tom Lee. He talks about what are the biggest risks that we should perhaps pay attention to? And he goes into it. It's geopolitical. There's a lot of other things that are going on, but he's still a bull. And so staying in the market is important. Make sure that you're in the market. I'm still 90% in the market. Now, let's talk about the core portfolio. Okay, I got some, like Frank Costanza on Festivus, I got a lot of problems to talk about with you people. We're not going to go into the feats of strength. SMCI had their 1,000, their 10-for-1 split. So automatically, I would be removing 900 shares from SMCI. Remember, this portfolio is not managed to be optimized. It's not timing. It's not a buy now, sell now portfolio. It was started to show people that stock picking is tough, but there are definitely ways of making sure your portfolio outperforms the market, even without doing hours and hours of research or buying small cap names that 100 times in a year. Most of these are enormous companies with huge market caps. Okay, these aren't ones that will typically soar, go 10 times in a few months, but they are names that have some volatility. So trading that volatility, and when we're in a bull market, it makes me look like a genius. Okay, we can compare the performance. I haven't made many changes to this, but you compare the performance year to date. We'll even go 1 year out. Okay, 1 year, I'm still beating the Qs. 1 year, I'm still beating SPY. Everything on this portfolio points to it's a great portfolio. I would argue it's not optimized to the point where you want to optimize it, but it's a good mix of stocks. Okay, so when I make changes to it, I don't make them lightly. I go about it. It's like once a quarter, and we're at the new quarter, so I got a lot of changes. Okay, the first change, again, I said SMCI. We're taking out 900 of that because, it's just 100 shares of each stock. So automatically, I would take out 100 or 900. I'm taking it all. SMCI is being removed from the core portfolio. Okay? There is nothing wrong with the stock if you're in the stock. It is just being removed from the core portfolio. And there's a couple of reasons. Take a look at this. Now, we went through this 4-hour this thing, so it removed all my stuff. I'm going to draw a trend line for you, okay? I'm going to draw a trend line that looks at old resistance, okay? We're going to go down here, and we're going to draw this trend line where it touches where it popped to, okay? We can look at that one. We can look at this. We're kind of looking at that. I wanted to use this pop where it kind of first touched that. And yes, we touched this thing. It is now turning into support. Okay. Look at that one. Resistance here, support here. It didn't hold support, but you can see how we're getting pops and capitulation against this. I would argue we're probably going down into the 30s. There's a couple of reasons I'm removing this. The first one is I don't like that the management hasn't released the 10K. It's following the same thing. When you see management do douchey things, you don't want it in your portfolio. Now, does that mean I'm getting out? No. I'm in for 100% profits. I'm not buying this one. Therefore, it comes out of the core portfolio. It's similar to Target. When I took Target out of the core portfolio, and you can see all of these moves, by the way. All of the moves are logged down here. It is free to follow. You don't need to. You absolutely do not need to pay for this. This is 100% free, and you can see all the moves that comes with it. Okay, but SMCI is being taken out. That's the first one, and there's no other reason other than management is douchey. Another one that's being taken out. Okay, but mind you, we're up 1,234% in this name. Okay, the initial cost was $31,000. $31,000. Current value, $416,000. We're up 1,234%. That is the major gainer in this portfolio. So even though we're getting out when it's super, super down, we're still getting out with an enormous profit. Okay? Enormous profit. That is a huge, huge profit. So I want to point that out. The next one that's coming out, it's Boeing. And Boeing is right here. And we're just going to highlight it. I'm not going to put that one up there. Boeing, we put in, let's see, the initial cost, $21,000. Today, that's worth $15,000. We lost 28% in this one. Now, since I bought it, it did go up. This one, I will tell you, the only reason I'm taking this out is because there's rumors that they're going to dilute shareholders. They have a strike. The management of this company has been horrific. It doesn't mean you can't trade this. It doesn't mean you sell this in your portfolio, because I do think once they get things on track, they can change it. But when you look at this weekly, okay, this does not bode well for this stock. Take a look at this weekly. We can even take a look at a quarterly. Okay, we just looked at quarterly on this. Quarterly, it doesn't look good for the stock. Is it going to come up here and probably bounce at 160? Yes. So I wouldn't necessarily get this. Remember, I'm just rebalancing this one because the management sucks. It sucks. And I don't like it. So I'm removing Boeing. Okay? That's a blow to the industrial portion of the portfolio because I'm definitely way more overweight in tech, but I don't care. Another one that I'm removing is Occidental Petroleum. I sold out of Occidental Petroleum around 58 to 60, somewhere in that neighborhood. This one, we're down 10%. Okay, I bought 100 shares of this at 57. It was $5,700. Today, it's worth $5,100. So I lost $549. Again, it's 100 shares. Not a huge position in this name because 100 shares at $50 a share was only like $5,000. So it wasn't a tremendous expense in this, but I'm taking it out. Now, why am I taking out? Because look at the performance of Occidental Petroleum, okay? When you look at the performance of Occidental Petroleum, it has just been a nightmare of a stock. When you go and you look at the fundamentals of Occidental Petroleum, they make no sense. The actual valuation is super high compared to the rest of the industry. You're trading at a PE of 14. The industry's trading at a PE of 10. Anything over like 10, you should just get rid of. The profitability of this one, it's not great. I just don't like it. You know, Warren Buffett likes it. It puts off a ton of cash. They haven't done anything with the cash. I don't think that this one, I think it will get back to 60 because Buffett invested in this one and he knows his stuff, but I'm not willing to hold it. The reason I'm taking it out, because I'm adding Berkshire. I'm taking it out because I'm just going to add Berkshire. Okay? This one's going to be a huge expense. 100 shares at 460, that's $46,000. It's going to be a huge expense at all-time highs, close to all-time highs. But instead of taking Oxy out and not replacing it, I said, you know what? I'm going to own some Oxy, but I'm also going to own other stuff. And I think Berkshire puts me in that right position. I like it. That move to me makes sense. It's going to move Berkshire into a much larger percentage of the portfolio, but I think it's going to actually do a much better job of growing with some type of dividend. Again, I think it's going to diversify the portfolio a little bit more because Berkshire is invested in things that it's not 100% tech. So I like that move for diversification. It gets rid of an energy sector, but it puts in much more diversification rather than just energy. Okay? and I took out SMCI. I'm going to replace it with Dell. Okay, so I'm not getting rid of SMCI in my server exposure. I'm just putting in Dell. Now it's $118, so it's going to be $11,000 that I'm going to buy 100 shares with. I'm replacing SMCI. I've got a ton of cash in this portfolio. That SMCI is going to net me $416,000 worth of cash, but I'm only going to spend like $11,000 on Dell. So again, it's not a portfolio that's managed effectively, but I'm doing it. Okay, there's a couple of things I want to point out. I had HPE on the watch list. I have VRT on the watch list, and I had Dell on the watch list, and I have CrowdStrike on the watch list. Okay, Dell is getting moved over there. There's another one that I want to put in the honorable mention, and it's Oracle. Putting on the watch list before I forget it. I'm putting Oracle on the watch list because I'd like to add Oracle to the core portfolio, and it might make sense. It might very well make sense. So that one might come in at some point in time. Now you can see I added HPE 1% ago. I added Vertiv 1% ago. I lost 1% on Dell since I added it to my watch list. I lost 1% on CrowdStrike since I added it to the watch list. But I like this one. I like this portfolio. I will continue to do that. Those are the major changes that I'm making. Now, one thing that you have to know about Dell is I'm not making it because I think it's going to soar. This is going to be capped for quite a while. Michael Dell is selling so much Dell right now, and he just got approved to sell so much more. He's selling it, so it's capping it right now. I think once he's done selling it, I think it takes off. The valuation is not crazy on this, okay? We can look, the valuation is C. It's got a 16 PE. The biggest issue is the gross profit margin at 22%, okay? Because sector, you're at 49%. And the servers are taking them down. But I do believe that this one has momentum behind it. It's a B+. When you take a look at the 3 months, it's down 14%. 6 months, it's up 3%. That short-term performance should allow it to rebound. And I do believe that you've got enough gaps up here for it to come back over its 200-day at 125. I'm holding this one. I'm not buying it. I think I may have added some at 112 or so. I know I've got a lot at 113. But I like this one. I like this one. I really, really do. So there you have it. I will make those changes after this. I will put them in the newsletter. If you're not signed up for the newsletter, you can go to Linktree. Sign up for the newsletter right here. Let us help you grow. That's what the same theme song says. It's free during the week. Buy everything Tom Lee says. That's what's yesterday's newsletter. I've got video course 1, video course 2. I'll do video course 3 here soon. But the newsletter is free. Okay? Now, let's see. We're going to move on to the Fear and Greed Index. If you don't know what the CNN Fear and Greed Index is, it measures the market by participants basically doing a survey. There's nothing, you can see the pig, nice little AI pig sitting on top of money. When you get to extreme fear, we talked about the charts. We talked about how QQQ in the near term looks like it's a little bit stretched. When you get to this extreme fear, typically the market will pull back. It doesn't mean you can't go higher for longer. It just means that typically there's going to be more people who are selling. It's the I can't sleep at night because the stocks are at all-time highs. That's where it is. So again, from the previous close, it was at 67. It's at 75 right now. 1 year ago, it was at 28. 1 month ago, it was at 62. So we've moved up from 1 month ago. 1 month ago on October 1st, I'll be interested to see what it is on October 5th, because that's 1 month away from that Japan unwind trade. Because that one went down to the fear index. I think it was somewhere in the neighborhood of 40. But 1 year ago, it was at 28. It didn't feel comfortable buying, but that's when you want to buy. Right now, I'd argue it's a little bit hard to buy. It's just a little bit stretched. Again, the Fear and Greed Index is something you want to keep an eye on. The VIX is the other thing you want to keep an eye on. The VIX, if we're at extreme greed, this VIX probably has to come up. It's at 16. Probably has to come up to 20. So just a little bit. Now, there's a string of tweets. If you want to look at the hashtag mystery broker, you can read the history of Michael Santoli's list on the mystery broker. The disclaimer is he's a source quoted for more than a decade. At the time, Barron's is a real person. It's not me. It's someone whose name you'd recognize. Blah, blah, blah. There's a whole disclaimer. Mystery broker update. He continues to give the stock market the benefit of the doubt after having bought back in at 5,500 on the S&P 500 weeks back. Now, if you follow 5,500, that would make SPY at 550. And where is SPY today? SPY today is at 574. So he's doing pretty well. He's doing pretty freaking well. I would argue he's doing really well. Sees likely further new highs into year end. So he does see us going higher into year end. The correction avoided in September is likely to come in October or November. But his market-based indicators foresee no bear market ahead. So again, I'm looking at that 5% I've got to put in. I'm kind of like the mystery broker. I do see a pullback happening. I'm not buying today. I'm staying patient. He thought Powell was a bit more hawkish, data dependent than perceived. Powell had a speech yesterday, and he said, hey, we're data dependent. He sees 2 more rate cuts of 25 each. But he said, we're data dependent, so it could be 50. Mystery broker's not calling for a recession. The Fed is still in that window where preferred soft landing, orderly ease outcome seems on target, but that can change within months. He cites the 1989 cycle as an example. China's stimulus pulled forward some of the seasonal cyclical stock strength. He doesn't expect it to last past January. I would say the same thing. I think China's a trade, not an investment. The 10-year Treasury about fairly priced. Healthcare still his favorite sector. Seems a short-term oil rally, but 2025 outlook, not good. That's it. 2025 outlook, not good. So he's saying go into the year end, have a rally, but the year end, that next year might not be good. Again, there's standard disclaimers on this one, but he bought in at 550. He's probably going to add. He's raising his price target, sees even higher numbers than where we are today. I will tell you, I saw, and I don't have a news article on this one because I was just kind of I think I was walking around or doing something, and I wrote these down. So here's the S&P year-end targets. And remember, all of these are thousands. Just take off the last zero, and that's where SPY trades. Okay, BMO, 6,100. 6,100. Evercore, 6,000. That's higher than 5,700. Oppenheimer, 5,900. Okay, there's 3. Now your fourth one, RBC, 5,700. It's a little bit lower than where we are today. Okay, they're saying by the year end, we should be at 5,700. UBS, Goldman Sachs, and Citi all say 5,600. Now this top line right here, 560, 516, you can see here in July, that was an all-time high. This was the April pullback, okay? This is the range that you're trading in. So it's between 500 and 565. If UBS, Goldman Sachs, and Citi are right and we end at 5,600, that is going to justify this 565 as a resistance level. Now, if you pull back to 565, we haven't seen it. We haven't seen it this low yesterday in the afternoon candle. The low was 568. That's close enough to start assuming that it might be support, but once you break down, have your stop losses in if you're trading. So again, the mystery broker, the banks, I'm trying to organize it for you. If it's not organized and you're going to comment, it's unorganized, F you. Talk about China. JP Morgan on China and stimulus. I don't think it's an exaggeration to say that China is acting somewhat out of desperation, given the severity of the declines in the charts shown below. Now the charts, China's money supply, down, upper left, bottom right. China's residential floor space starts, bottom left, upper right, not great. China commercial residential property prices, not good. That zero line, not good. China consumer confidence is in the basement. So again, they're acting out of desperation and not out of strength. That would tell me it's a trade. But again, you can't argue that don't fight the Fed. That's what don't fight the Fed means. So your China's, I think it's FXI is the symbol. Yeah. This is the one with the Hong Kong shares that I like, and it might have some short interest in it as well. So this is just a China ETF, FXI. You can see right here, I think you're going to 33. I think that's going to provide some resistance. As you get through there, you might be able to get back to all-time highs. You might be getting 35, might be the next one. 38 might be the next one. FXI. If you want to do China stocks, you can do BABA. I think NEO reported some huge deliveries, so I think that one's good too. But FXI is the way to do it. There is a new NVIDIA competitor, okay? Cerebras. They just filed for a U.S. IPO under the symbol CBRS. If you don't know about the company, it's because they're private right now. They just applied for the IPO. I don't know if it's expected when it's going to come out, but they applied for the IPO. This is a company introduced AI inference solutions, which it says is 20 times faster than NVIDIA GPU-based hyperscale clouds. 20 times faster? It lost $66 million in the 6 months ending June 30th, 2023, respectively. Cerebras raised $250 million in Series F round 2021, valuing it at more than $4 billion. You can bet anything that mentions NVIDIA and mentions we're faster than NVIDIA is going to get an enormous valuation. Might not be a bad one to actually get in on. Good luck. It's going to be a while from now. Probably makes sense to just keep an eye on it. I don't think it affects NVIDIA too much. We can go and take a look at NVIDIA stock. I think it's up slightly today. It's kind of just floundering. That 120 price, that 122, is just providing resistance. You know, their earnings aren't coming up, I think, till November or so. So you don't have earnings. It might even be December because they just released in August. So you're going to have a long time between catalysts on this one. But when Meta reports, when Google reports, when Amazon reports, when they all report that they're spending money on the cloud, guess what's going to skyrocket? That's how you play that one. Now, talk about some trades. Wells Fargo announces its Q4 tactical list and includes Tesla, LVS, and Ulta. Okay, so Las Vegas Sands, Q4 setup is attractive. Macau bottoming. Londoner Casino opening. So LVS might be one you want to look into if you're a gambler. If you have DraftKings, maybe LVS is kind of that barbell approach of actual casinos versus just an online casino. LVS, yeah, I mean, look at that run from 40 up to 50. 40 got you in at just September 13th. September 13th, it got you in at 40. That's crazy. Crazy good. Oof. Covered that gap. Covered the gaps get filled. It's like an old man spreading his legs at the pool. Gaps get filled. You can see the gap shot of an old man sitting on a lawn chair when he's got shorts on. Gaps get filled. You know, they recross their legs and you can't see that junk anymore. Good luck. Let's see. TC Energy, Willis Towers. Ones that I want to point out, Tesla. This is underweight tactically. We have an underweight rating on Tesla. We see declining delivery growth driven by owner demand. Again, this afternoon, they're going to release their deliveries. I don't know if they did it in the morning. I don't know when they're doing it. We estimate auto gross margin ex credits fall by 400 basis points. Tesla is weak. Now, remember, and I say this, and I know I'll get a lot of hate. Tesla's not weak. They're an AI company, blah, blah, blah. This is trading on an enormous valuation. A valuation has not mattered to this company, but that 260 price point is an absolute resistance level, and it's been hit multiple times. So until you get above that, you can't get back to these 400 levels, okay? Your next resistance would be 300, 320. So you've got enormous resistance levels to build back up to the all-time highs of 400. Doesn't mean you can't do it, but you're going to see a lot of Wall Street come out and say it's overvalued. Because if we go over here and we look at Tesla, I can tell you, Right now, it is overvalued even for a tech company. You're trading at 111 times, 112 times forward earnings. Even your PEG ratio, which factors in growth, is at 9 going forward. The trailing 12 months, it's at 69. It is incredibly overvalued. Incredibly overvalued. Now, the gross profit margin of 17% is great for a car company. It's horrible for a tech company. So you got to decide, okay, which one is this? And it's always been in that middle. But again, I don't condemn Wells Fargo for putting it on the list. I just think it's overvalued. Ulta. We see risk to Ulta's long-term targets and street estimates given larger than expected competitive headwinds. Same thing. Warren Buffett went into Ulta. We can look at Ulta. I got out of Ulta. I don't look at Ulta, so this is my first look at Ulta since I sold it. You can see some weakness right here. It got that nice little Warren Buffett bounce. I think that was 320, and then it got that gap. Gaps get filled down to 330. Okay? This is just a stock that might see some weakness. We see ELF. ELF is still killing it, not as far as the stock goes, and it's one of the most shorted stocks. But we see them gaining market share. We see smaller brands gaining market share. You don't see it from a stock standpoint. It's super heavily shorted. I think once you get down to that 200-day, it's 78 or so. If you get under 100 on this one, maybe you come back to this 92 price point, and then you see a nice little pop. The MACD, all of the RSI, all of the indicators are resetting. So again, Wells Fargo announces their Q4 stuff. I think that's good. Let's talk about social requests, okay? Philip Hornsby. Gary, been on vacation for 2 weeks. This is from Facebook. Don't know if you've already covered this one, but Palantir, PE is high, and Peter Thiel has been selling a lot. Has it already ran? What do you think? Palantir's overpriced. Palantir is just overpriced. You cannot argue with the momentum, though. Do I see a pullback in it? I think it's got to pull back. It's been too strong. Look at the weekly chart. The weekly chart has just run up past that 25, which was resistance. It pulled back here for 1 week in July and then shot back up. That's good news. That means this one at 25 is support. I'd rather see you buy it at 25 than buy it at 37 because we go look at the valuation of this thing. Again, the profitability is there. The valuation, you're paying 104 times forward earnings. Even your PEG ratio going forward, it's better than Tesla at 69. The forward one is 4. That's just too high. But the momentum, which is probably, I would argue, the strongest factor, that's taking it higher. So right now, nobody wants to sell this one. You have volume, increasing. You had volume here in February. You have volume increasing now. As volume starts to come down, I would expect some weakness in this one. I would just expect some weakness. Doesn't mean that they're not going to announce a crazy good earnings quarter on October 30th. If you're holding this one, I would continue to hold it until the 4-hour gets you out. That's probably your best bet. Again, I'm not in this one. I wish I was. I think I sold it like 25 because I saw that resistance. I wish I had held on to it. So, Philip, there's your take on Palantir. The 2 weeks didn't hurt you because, September 9th, 2.5 weeks ago? Didn't hurt you. You were at 34. Got you a nice 10% more. So when you go on vacation, maybe you should go on vacation more. The vacation curse for Gary is everything goes down when I go on vacation. So let's talk about scans here. We've got Occidental Petroleum, which isn't the core portfolio, but it's going to come out. It's going to stay in the energy names that we trade, but it does come out. Another energy name that has a cross up here, Exxon. Exxon, you can see it at 116. The MACD is just kind of floundering around here. The algorithm's smart enough to know, hey, we're going to get you in, but we're not going to get you out until a few more moving averages move over. But that's the range that we've been trading for a little while. I mean, this goes all the way back to May. That's the range that we've been trading. If you want to buy in here at 116, you're basically saying, hey, oil's going to go up. I don't think oil's going to go up, but it's a safe name. That's why it's in the core portfolio. Palo Alto Networks. This is one that has been just floundering around at this 340 to 350 level, 341. Now you have this gap that's been filled all the way down to 327. Is that one to get into? I don't know. I mean, it's still on its way up. You're in a bull market until you're not. The MACD's resetting on the weekly. The RSI is at 54. Not horrible. Now, one that is alpha picks, and we'll go over alpha picks because this is the second leading alpha pick, okay, as far as what they have in their portfolio. MHO, MI Homes is what it is. It's a strong, we'll look at this one because this one got you in at 166 here. Now, the algorithm makes you 152%. Buying and holding makes you 360%. You may say, why would I want to trade the algorithm on it? Because you make 152 freaking percent. And I don't know MI Homes. I know nothing about this. Do I want to, if you're into the alpha picks, if you're subscribed to alpha picks, you absolutely should have this in your portfolio because that's the portfolio that you're following. And you know what? Look at the performance of alpha picks, 139% versus the S&P during that same time period, 38%. This is a curated portfolio of 2 data-driven stocks, one per month. They have one today. I don't know what it is. I'll find out after I get off the air. But they alert you when to sell. The stock, and they basically go over their portfolio every month with a webinar that you can tune into, and they go over the entire portfolio. So if you're new to investing, understand this is $450 for the access to this portfolio, and you get it for a year. And you get these, I think I get daily emails at this point, but they do data-driven stocks. This is a fantastic portfolio. The reason I'm an affiliate of it is because of the performance. Now, how do you get this? And how do you get $50 off? You go to my link tree. Right down here, Alpha Picks. Want to beat the S&P? Right here. And it saves you $50 off that portfolio. Now, if you want to know that MI Homes is a strong stock in the quant, that would be seeking Alpha Premium. You can see the quant rating, and you can see this in a ton of stocks. Thousands and thousands of stocks that the quant covers. This is ranked home building, number 2 out of 24. Green Brick Partners is ranked even higher. 4.84 versus 4.88. And we can look at the market cap. They're about the same market cap, 4 billion versus 3 billion. So we can look at GRBK. Has this one run up? Yep. It's at its 52-week high. If we look at MHO, is this at its 52-week high? Nope. It's close, 173. But again, do you have another leg here? 172 is the resistance level. That's the all-time high. I would argue you want to wait until that turns into support rather than resistance. But MHO, I wanted to bring it up because it's a name that I would never know and I would never understand. And then all of a sudden, Alpha Picks picks it and they're like, oof. And I was even, when they picked it, it was a while ago that they picked it. But I was like, why do I want to do this? And then all of a sudden, we can look at the weekly on this one. I think it was around here that they picked it, somewhere in this 60 range or something. It's one of their biggest ones. It might have even been down here in November when it was 43. I don't know. I don't remember. But I'll bring it up as part of the scans. There's a lot more scans. Again, you see me do these charts. You've seen the 4-hour algorithm. They're performing. Say you want Tesla. We talked about how Tesla is not a great stock, to buy and hold because that 260 is resistance. Trade it on the 4-hour algorithm. I put this in the newsletter yesterday. I put a chart in yesterday. The algorithm makes you 176%. So understand this, okay? If you just bought Tesla 24 and a half months ago, okay, 24 and a half months ago, you're down 8%. And you just held it because you didn't have a strategy. But if you had a strategy like the 4-hour algorithm, which I give you when you sign up for Trendspider, there were 23 positions. So it's not even once per month. Okay, it's not even once per month. Yes, in certain months, you may be trading more. You can see the entries and exits right there. You can see them. You don't make a lot of money on these, but you know what? It got you in when it was trading up. Let's pull this out a little bit. We're going to pull this over here. See? 163 on May 1st. Got you out with a nice, what's that? 56% gain? 56% gain. It got you out here. Let's pull this. We're going to pull this back a little bit. And we're going to pull this back. Here's Tesla. Back here in January, February. Nice 62% gain. December 28th, it got you in at 119. December 30th, 119. Got you out here with a 62% gain. Saved you from there. Got you back in. Okay? That's what the 4-hour algorithm will do. That's what back testing does. So if you want the 4-hour algorithm, go to my link tree. And it's the top link right here, Trendspider. Sign up for Trendspider. $53 a month. And you get the 4-hour. The 173% that you just traded in Tesla would pay for this. Because I guarantee you're trading more than $1,000 in Tesla and you made 173%. So again, have a strategy. That's the key. There's leveraged ETFs that got scans today. Go if you have Trendspider, go and scan. Okay, I do market scanners all the time, and you can use my watch list to scan. You can use this. I provide this scan. Okay. And then you use one of the custom watch list leveraged ETFs. Okay, these are 2 and 3 time leveraged ETFs that get cross ups, and there's a ton of them today. SPXU up 2.31%. Okay, HIBS up. Let's see, this one is up 3.29%. TSLQ up 2.1%. Okay, there's a ton of BERZ, which is FANG inverse, up 2.4%. TECS, which is a technology bear, 3 times, it's up 4%. We talked about this market being extended. You can see we're seeing down market in the regular watch list, but when you scan on the leveraged ETFs, then yeah, you can get a ton of opportunity there. So scan using that. Again, it's about opportunities. So there's 3 things that you can get right now. There's Trendspider, which is $53 a month. Seeking Alpha Premium, which is the second link on Linktree. And that's where you get the quant. I save you $30 on that link. And then Alpha Picks, where I save you $50. Okay? And then there's the newsletter. If you want the newsletter, the video course on how I trade, how I do things, that's what that is. So if you want to pay for that and support the podcast, you can. That's everything. Good luck today. I hope we see an up day. We'll see. Okay, take care.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.